Hi guys, welcome to the Savvy Money Show with me, your host Sean. Today we're starting with Big Five Sporting Goods Corporation. Now, you have people scared of this because a deal with Nike is coming to an end, and people are thinking, oh no, people are not gonna go there anymore because Nike, not gonna be able to sell Nike shoes anymore. But people buy more than Nike. Their market cap is below the enterprise value. Trailing PE is 6.4, and as you can see, the forward PE has compensated for the Nike deal. Price to sales is under 1, price to book is 2. And we can have a look. They've recently announced earnings and declared a special dividend. They've done well, in my opinion. And that's if I can get it up. They've achieved record quarterly sales and earnings. Increased sales 31.2%. Increased guidance. Now, they're also talking about opening 5 new stores. And this is going to be the 4th quarter in a row they've increased the dividend. I'll let you look at this at your own leisure. I won't take up too much of your time because you may not be interested in this one, but it's one that I'm interested in. I spoke in my Discord yesterday, and my Discord's completely free. The link's in the description below. There's rumours of a takeover. There's rumours of takeover from Shopify and Apple. So who knows? We may get a bit of a bidding war, but I think Apple is the more likely one. And people were a bit disappointed when no one came out and confirmed. So affirm started going down, and that presented a buying opportunity, especially as affirm had been beaten down anyway. And I picked up 10 more shares in affirm, and then Apple come out and said it was partnering with affirm to offer buy now, pay later in Canada. Now, I think this is going to be a try before you buy. They're trying in Canada to see if it works, because the Goldman Sachs, who do the Apple Pay, do not have the international, not very good internationally with payments. Now, at the same time, if they partnered with them in the US or internationally, then the share price would rocket. Just in Canada, it will go up a bit, it will do well, but it's not going to make it rocket. So I think this is a way to keep the share price down while they try it and see if it fits their mantra. And then if it does, they'll pick it up when they finish their testing. Don't forget, as I said before, affirm has a 100% business retention rate and a 69% personal customer retention rate. So that's a good retention rate to have. Now, Under Armour, as we can see, they've had a good quarter and raised their full year outlook. Now, revenue up 91%. I think this is a great buying opportunity. It's gone up a bit, but I still think it's a great buying opportunity. Don't forget that the uniforms on Virgin Galactic are made by Under Armour. So the more they go into space and the more they publicise that, the more you're going to see the Under Armour symbol on there. Branson took all the shine last time, but the more we see of these launches, the more we'll see the Under Armour symbol. And in London, they are marketing a lot more. So I do see this doing well. Now, sorry about that. That's something else. I'm looking to diversify away from stocks. Now, I spoke about this one before, Crocs. Now, Crocs had amazing earnings, and I'm looking for it to settle down, and I think I'll be going into this one fairly soon, and I think this is an amazing company, financially wise, and I think considering its share structure and the low float, I think this could do very well. I also liked. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me. Just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, depending on the platform you use if you deposit a small amount. Because I spoke about stocks rocketing, can't really miss out Rocket Companies Inc. They well, they were due to have a bad couple of years because of the housing market, but they're still undervalued in my opinion, and they're looking into going into refinancing for solar. But of course there's lots of financing areas for solar, but at the moment refinancing for solar, the government grant has to go to the refinancing partner. Rocket are trying to work it so the government grant doesn't have to go to the financing partner. So say for instance, I'm in the UK, not the US, so it won't apply to me, but say I was in the US, I wanted to get solar, I'll work out a payment plan, but I wanted to get the grant now, and not give it to Rocket Mortgages, or not give it to the person I'm getting the finance for, or second mortgage from. I know I can pay the second mortgage, but I don't want to let them get all this grant in one go, because the interest rates are so low. What do? I get a grant from the government, I keep it here, I invest it, do whatever I want with it, and then I end up making more money on that, and I go with Rocket Mortgages because they're the only one who does that. Anyway, again, something I spoke about in my Discord, DigitalOcean Holdings. Now, you wouldn't really know much about it unless you're a customer or you're in the know. I've traded this, but it's a cloud company. When you start looking at it, you're thinking market cap above enterprise value, forward P 112. Oh my god. Price to sales 19, price to book 7.64. You're thinking this is well overvalued. But then you look into it, you're thinking, hold on, but it's forward PE, not trailing PE, which means it's going to become profitable. That's good to know. You know, it's not profitable at the moment, and which is bad. Yeah, you can see there its assets are outweighed by its liabilities. Oh, we should be running away from this one. But then you look at what's happened in the last quarter. You've got the liabilities were half a billion, which is slashed to 48 million, and the assets have gone up to 893 million. That's a huge jump. Now, and it's not done purely, and people are saying, oh, but dilution, but it's not done through pure stock equity. They have issued stock, yes, but it's done as well by their sales, but they're working hard throughout there. I've spoken to some of the customers, and the customers have said their product is 10% the cost of Amazon Web Services. They have a good product. I haven't used it personally, so I cannot comment on that. I think this is one to look for the future as a speculative play, and focus on the word speculative. Now, a report has come out with these guys. Not that I trust Citron as far as I can throw them, who think they have a $200 price target and had at a Shopify of cloud computing. Now, if you want that report, it's in my Discord. There's no problem with that. But another cloud computing company I spoke about before that I'm playing, I'm trading, is SentinelOne. I'm buying it, then it's going up, I'm selling, and it's coming back down. End up keeping a share as my profit. Now, people may think, oh, one share is not worth the hassle, but I know CrowdStrike is on an island of its own, the best of the best out there. But I see this company as, although it's grounded in a pack of cloud cybersecurity companies, I think this is in a similar position to where CrowdStrike was a couple of years ago. So I think it can get there, or at least catch up some distance. That's why I'm doing all this. Anyway, I'll see you in the next video. Thank you for giving up your precious time.